The future of cryptocurrencies is poised to transform the global financial market. Large financial institutions, which once stood on the sidelines, are now stepping in, considering cryptocurrencies as part of their investment strategies. This is no longer a niche movement, but a paradigm shift in the economic system. With investment funds like Bitcoin ETFs growing in popularity, we're seeing institutional adoption gain traction. Banks and major payment companies, such as PayPal and Visa, already incorporate crypto assets into their services, opening doors to millions of users. The impact of this? A move towards the mainstream, making cryptocurrencies part of global financial day-to-day life. Regulation can be the key or obstacle to the advancement of cryptocurrencies. Governments around the world are keeping a close eye on the disruptive potential of these digital currencies, and this creates a battleground between innovation and state control. Some see regulation as a necessary evil to protect investors and prevent abuses, while others fear that excessive regulations could stifle freedom and the development of new projects. However, clear and fair regulation can bring legitimacy to the market, attracting even more institutional investors. The balance between innovation and regulation will be decisive for the future of the crypto economy. Scalability is the biggest technical challenge to the mass adoption of cryptocurrencies. Projects like Bitcoin and Ethereum face serious problems when it comes to handling a large volume of transactions efficiently. Currently, networks are congested, with transaction fees that can be prohibitive for the average user. Solutions such as Ethereum 2.0 and so-called Layer 2 are being developed to solve these problems, promising faster and more accessible transactions. If these solutions are successful, the cryptocurrency can finally compete on an equal footing with traditional payment systems such as Visa and MasterCard. But the question remains, will these improvements arrive in time to prevent the market from losing confidence? The universe of DeFi and NFTs is at the forefront of what's to come. Decentralized finance, DeFi, and non-fungible tokens, NFTs, are not just temporary fads, but indicative of how the future of finance and digital ownership is shaping up. DeFi offers the promise of a financial system without intermediaries, accessible to anyone with an internet connection. NFTs, in turn, are already revolutionizing the art and entertainment market, creating new forms of monetization for artists and creators. Imagine a future where any asset, physical or digital, can be tokenized and traded globally, instantaneously and securely. The potential here is immense, and we're just scratching the surface. Government-issued digital currencies, CBDCs, can completely change the rules of the game. Unlike traditional cryptocurrencies, which are decentralized, CBDCs will be controlled by central banks, giving governments more control over the monetary system. However, this shift could also facilitate the adoption of blockchain technologies on a global level, with profound implications for the future of finance. If a country like the US or China implements a successful CBDC, it could force other nations to follow suit. The result? A scenario where digital currencies coexist, but with different degrees of freedom and control. The real battle will be between centralization and decentralization, with users deciding which path they prefer to take.